and welcome to this video tutorial brought to you by To The Tick. Today's subject is the bullish continuation patterns. Now, we've discussed a bunch of these individually, and you will find videos, text, and chart samples on every single one of them individually. But I thought before we went any further, I would do a summation of thoughts plus add a few nuances in here that perhaps we didn't cover. And we're going to look at this as a group of patterns and see if we can find some edges looking at it strictly from a group standpoint. So first, let's go to Merriam-Webster's and let's find out what the definition is for a continuation pattern. It's the act or fact of continuing in or the prolongation, isn't that a great word, of a state or activity. Okay, basic definition. Definition number 2, resumption after an interruption. So we're going to think about these here. Something that continues, increases, or adds. Interesting words. And related words here, elongation, extension, lengthen, stretching. Okay, we are looking at the market in trend continuation patterns. We are looking for trend to continue, to increase, to add to itself. We are looking for trend to resume after an interruption. We're allowing an interruption. So the continuation part of a price pattern is what comes after you see something happen in the market. It's the act or fact of continuing or prolonging that activity, stretching and lengthening what's already happened. First, we have to start with the pole. Visually, when we look at price patterns, we have two parts, and the pole represents the drama. The pole represents thrusting action. We have to start our analysis with a reference point. Typically, we learn to start with a bullish base of support in this case because we're looking for those bullish patterns, and we look for those bears to have a wall of resistance with the bulls having a base that they are building, and have yet to penetrate that resistance. Now, the pole in a visual representation of this price action, as we watch things unfold bar by bar here, the pole represents that price action for your breakout. It's the impulsive thrusting action that creates a new breakout. And typically, the larger your base here, the larger your picture is in the background. You want to look at your larger charts, whatever time frame you're trading. If I was trading a minute, I'd still be looking at something larger. If I was trading a day, I'd look at something larger. You want to see what's happening in your history and your price action. And then you want to see that history get altered with a whole new breakout, a surge out of volume, a surge out of price, and all of it coming together to create visually something that you can see sticking out of your chart. The straighter and more inline straight your price action can you get bar by bar by bar, continuing to come, putting in yet another new high, the better. The more drama that's created in the pole, the better. The more spread between your breakout and your tip, which is your highest high, swing high. So recognizing the pole for the energy and the trend control that it represents. Study what it looks like in your volume and understand your background history. And those are the main items about the pole. We do like for the bulls, once they've shown us this much aggression, the concept of what happens next, we don't want them to give very much back. So as a general rule, we don't want them to give back 50% of their pole effort. So however many bars it took them, 50% of that price effort, we want them to hang on to at least 50%. The pole all by itself, being part 1, once it's complete and you have confirmed that swing high tip, you can have a target for what's coming next. Measure your pole, and over here, the extension that you're looking for is a leg 2 in the pattern. Remember, we're going to resume the action that got interrupted. We're looking for things to grow and add. So our continuation pattern gives us a target based off of part 1, and that's the pole. I would like everyone to please recognize, again, we have discussed all of these individually, and no, these are not all of the continuation patterns. We do have others. But all of these represent bullish continuation patterns. Please recognize that every one of them has a purple pole that gets things started. Every one of them has a pole as part 1. Also, every pattern has a phase 2. Phase 2 is outlined by the immediate support and resistance, and in all of these graphics, it's the little orange line on the top for resistance and blue support on the bottom. Rectangular patterns up on the top, looking for more parallel type structure between support and resistance. Then the pennant, little short, squatty, stubby looking appearance compared to its big brother, which is that symmetrical triangle, same shape, just a little more elongated there. And then ascending, descending, falling wedge, all of them more triangular in shape, all of them open and spread and are squeezing prices to the far right side, with this one exception. The one exception is a tomahawk, and it is a expanding triangle, and the concept behind it is that the apex is actually what starts the pattern. All bullish, all of them are required to have the pole as part 1. Part 2 is where you're getting your variations on patterns. Okay? Part 2 is meant to be a calming of the action. It's a thrust out of the bulls, and then it's a pause so that we can regroup. We need to take a breather. We've expended a bunch of energy to create that pole, and now we need to take a little bit of a breather. All part 2s fit this category. Now, the trend direction, as I've already mentioned, is visually described by the pole. So we're looking for the pole tip to also be our swing high of our part 2 pattern. Okay, so now that we've gotten a good view, and again, all of these are available on the website, please go review them for all their details. And we want to look then at our consolidation phase. So first of all, appreciate that the pole has already been created. And once you confirm that you do have that swing high, swing low, from that moment moving forward, once I have my swing high in place that establishes the point where I must attach part 2 to the pole, it also says it's the swing high in prices where they ran into enough resistance where it stopped that advancing price action. But from the moment that you get that swing tip, swing high, and you get your first swing low, from that moment moving forward, you have your pattern outline. Period. If I don't show you another thing about phase 2, all of them are going to fit within this pattern of swing high to swing low. The very first swing high, swing low, rest or pause that you get after that pole. So let's watch this here. The very first swing low, swing high, outlined by my gray dotted lines. Question mark, will all these patterns really fit in there, Lav? Come on, there's 9 patterns. Are you going to get them all in there? Well, here is the high and tight. Wants to come back on that pole and only allows 30%. The message behind the high and tight is that it must stay high and it must stay tight in the price action. So the high and tight has already been thrown out. We came through the high and tight structure. The shape of that rectangle is that high and tight. So the high and tight no longer qualifies. It got pulled down too far on the pole. Okay, number 1, rule out. Now, the flags, rectangular shapes. The flags, we like to see them tilted. We think we get an edge if they're tilted a little bit to the back side. But the flags can be tilted on that pole in any direction and still be viable. Yes, the flag still fits. I could still fit that flag, first swing high, swing low, and still drawing my rectangle. Flag still works in that shape. Then we have the big boy rectangle. All it really means is that it can also be tilted just like the flag. It just usually means the rectangles go on for a little longer, or might have the same number of swings, but they're spread out in their timing. okay? But just a little bit bigger flag, really. And then there's the pennant, the little short squatty pennant. Does he certainly fit in there? Sure does. Swing high, swing low. Pennant structure still works in that first swing high, swing low. And then we go to the big boy, right-angled symmetrical triangle. Certainly it still fits. Then we have are descending, because the upper line is descending, and we get an equal bottom descending triangle. It still fits the pattern. Descending triangle still fits. Ascending triangle. Well, look at that. The ascending one still fits. Ascending, flat across the top, advancing across the bottom. And again, it still fits. Swing high, swing low, pattern still working. Falling wedge now. Again, falling wedge, the big drama is that you're really pinched on your tight effort and pinched on the bottom, but the tight angle is on the top. And yes, it still fits in my swing high, swing low. Still does. And finally, that tomahawk, that one with the apex that punches through my actual line. It looks just like a tomahawk. Maybe a huge, wide, spread out pattern like this, and it may be a little bitty one here in the middle, but still the point is prices get very tight in and on the pole and the apex. And yes, this pattern still fits. So all of our patterns, with the exception of that specialized high and tight, we can see the pattern possibly coming to fruition once we get swing one, swing low one, swing high one, swing low one. So can you imagine that? Everything fits in here. The whole point from here is that we need to establish what's the middle. We understand the swing high, the swing low, and we want to create the middle. Now the tomahawk here does a really nice job, because the apex being on the left, you get to see where that apex, where instead of prices squeezing to it, prices are going to expand away from it. So the concept of getting to see what I call that muddy trench, or the 50-50 level of your price action, gets established from swing high to swing low, the very first ones. Now I've said that at least 4 or 5 times. Are you getting the message? Does not matter what this shape is. We are going to be able to trade it very much in a similar fashion. We already have our first target, and that is the pole. The pole all by itself gave us a target regardless of what happens in phase 2. Now phase 2's targets are going to be twofold. Number one, if you have the room to use a muddy trench, and the muddy trench is 50-50 of your rectangle, 50-50 using your apex of any of your triangular patterns, but the 50-50, if there's enough room in here, you are welcome to trade it. Realize that in a consolidation phase, it is textbook that we must have 2 touches on each side. 2 touches. So far we only have 1 in our picture. We must have 2 touches on each side, and ideally we want 3 on one side and 2 on the other. We typically see as many as 7 touches and still be considered consolidation phase. Some of those bigger rectangles, bigger symmetrical triangles might have more touches and take more time. But the point is the pattern still staying inside this structure. The structure about a continuation pattern is what you're trying to make money off of. So follow the structure. Just realize that phase 2 structure is created very early in the pattern. You got to watch the pole formation, you get to watch the swing one, the first swing one, low, high and low, and now you get to sit back and wait for your consolidation pattern. Again, targeting inside here if there's room for your spread in prices or whatever instrument you're trading. Now the final option is that the pattern for the consolidation or phase 2 will also offer us additional targets. Now, do we need any more targets than the pole extension? Remember, we're looking for this to be a pause and only merely an interruption, and we're looking for this to continue and prolong and stretch. So again, the pattern itself will also give you targets. Again, it's going to come from the muddy trench and or that apex, and or more aggressively, once you confirm the breakout of your consolidation pattern, you can add your new target to that number. Now that's true of any of the patterns. Any of the patterns are going to offer us a potential with that outlining of a support and resistance, plus realize that triangles, we like for them to go on a 50 to 75% of the formation. We like for them to get on with it. I like to count to that number 3. I like looking for 3 efforts. I want 1, 2, 3, and then go. Somebody make a decision about what you're doing next, okay? But all of these are about working from that middle. Using the tighter the price action in your phase 2, the better. That's also true of all your possible patterns. And again, the elephants can't hide. Volume is the key. We like to see volume consolidate, meaning getting lighter, backing off of the energy that created the pole, and yet we want to see that buying. We want to see those buyers nibbling. We want to see them getting rid of whatever short volume they want to get rid of, and possible dumping it, which pushes your price hard on your support line in the bottom. And then we want to see those elephants not being able to hide. And once they make up their mind that they do want their money, we want to see them with a whole new surge, a brand new surge with volume and price. If we're lucky, the surging starts from that midline and continues on up to where we can get our breakout. Again, if the volume remains high, and I mean if the volume remains as high as it did while you created your pole, be suspect. Be suspect of a fake out and a possibility of this rolling back down very hard. If the volume remains very high, equal to what it created, what it used for the pole. Okay? There's a lot of exchanging of hands of volume. Sometimes you will see that when we have these big news-driven kind of spiky things. Okay? That is the only place to really be attention. And again, it's about the volume. So let's go ahead and proceed here. And again, we've gotten our targets now, and let's go on and do a summation of what we actually have learned through here. And the bottom line is all of those price action patterns fit inside the spread between my 2 gray lines. Every one of them. Here's what they all look like while they're in formation. Do some of them on the low end come through that support line? Yes, it's not a rectangle. The point is it's the price low that starts the pattern. Same thing on the high side, okay? So again, phase 2 doesn't matter which pattern they trade, the same. What we need to recognize is that the pole is the most important piece of information in here because it establishes everything about the potential to be going to something next and or continuing or prolonging this activity. Then our pattern, that's the pause, our consolidation pattern. We look for volume to do the same thing regardless of which pattern. We outline immediate resistance and support, 2 to 3 swings as a minimum, 2 to 7 is typical, and again it can take longer on some of the bigger patterns. Remember, it's still maintaining the structure is the rule. The longer it takes, the more momentum has died. But again, watch your volume. The apex or muddy trench, you can welcome to work to and from that line. Use it as an intermediate target area, and or if you're holding a position and it doesn't have the momentum to get on through that muddy trench, take your profits. Think about being able to take the trade again. It's all about the range and the spread in your instrument. The push in volume and price, again, a surge is what we're looking for. We want it to come from the apex and or that new breakout, and we get to target measured moves, and we've gone over all those measured moves, but basically the pole gives you your first one. The pattern measure itself gives you some play inside the pattern if it's wide enough, big enough, and the bigger picture pattern gives you the final targets for you to use from the apex and or from that breakout. Now, I have gone over our summation here of our consolidation phases and continuations, and now I want to share with you what I see us doing moving forward. What I'd like to do is we have to start working with these patterns with real charts. So what I have done is I have recorded a video, and I used the Tomahawk, one of my favorite patterns, I named it this, so if you hear me using the term, you'll hear it often. But the tomahawk pattern was what we were looking at in a big picture way. But the entire conversation while we're doing it is about trading the continuation patterns. What did we get into as the bullish base? And then can we recognize a pole? Can we see what it looks like in the real world? Can we recognize how many of our phase patterns are in that first breakout with the pole? And does it continue? Does the pattern still hold its bullish advance? And does the pole's value still continue? All of these questions we will get answered over time. And the way I'm going to do this is to have this continuation video, and then I will keep adding a new video that's strictly about a chart and discussing those continuation patterns as a group. These will be bigger concepts here, and I'll introduce this as a library under our bullish continuation patterns going forward. I will have one for both the bulls and the bears. Okay? With each one, there will be nuances that maybe didn't get expressed to you in other ways. For example, we'll talk some about the volume and what we needed to see in the volume. It's very important. You'll notice that my charts are always very clean. You have volume on the bottom and price represented on the right, but you don't see what instrument is. It doesn't matter. Is this 1 minute, 5 minutes, 30 minutes, 30 days? It doesn't matter. We're learning to recognize the patterns. And the more of those things we leave off the chart, the better. So again, the subject is learning to work with real chart data. I will offer a nice clean chart, and then the video will do the job of making all the notations and stuff for it on you, with you. So you'll get some clean charts to work with. So this has been brought to you from To The Tick today. I hope that I have lots of good educational material for you. Again, all of these patterns are broken down in detail, one at a time, but this video is about trading them as a collective group and what kind of nuances we might learn. Hopefully you learned something new today about that consolidation pattern. And again, please come and watch the video as our first in our library on trading, working with the bullish continuation patterns. Thank you very much, and I'll see you again soon.